back. The market cuts have deepened now, especially at the mid-cap end of things, and we have the AMC stocks, which are, sulking the most right now. 5% down on HDFC, AMC, among all the others, which are lower. But this is on account of the amendment that has come in the finance bill. Mutual fund investments where not more than 35% is invested in equity shares of Indian companies will now deemed to be short-term capital gains. Sonal is at the big wall. She's moved there to tell us more about that. Sonal.
Well, yes, this is a big development, and if passed by the government, should be a big blow to the debt mutual fund category. First, to the basic news, that is, the finance bill says that mutual fund investments where not more than 35% is invested in equity shares of an Indian company will now be considered as short-term capital gains. That is on redemption. It is applicable on all investments made on or after April 1, 2023. So which are the funds which could be impacted where equity portion is less than 35%? That would be debt funds, gold funds and international funds. Currently, these are taxed at a different rate. The short-term capital gains, they are taxed at the slab rate for any individual or the corporate, but the long-term capital gains, they were actually taxed at 20% and also indexation benefit was available. But with all of this, now these gains will be taxed at the slab rate, and hence the indexation benefit that goes away, and the tax rate will, as I said, will be the marginal or the slab rate. Additionally, grandfathering will not be extended to market-linked debentures as well. Now, of course, industry is not happy with this amendment, and it has come in as a surprise as well, because all the focus was on taxation of life insurance policies amounting to more than 5 lakh rupees. Insurance industry had made representations and asked for a relief in form of indexation for insurance policies, but that did not come by. No relief for insurance segment, but a blow to debt funds. With this, government has created level playing field for all fixed income products, and now all fixed income products will be taxed similarly, which makes the debt mutual fund segment less attractive for investors. What are the other categories?
Right, so not only is it no relief coming in for the insurance sector, but a big blow to debt mutual funds as well. Pavitra is here with us as well. She's going to tell us what the experts are making of this move. Pavitra, I guess they're not happy.
Definitely not happy, and we have been speaking to experts through the morning, and everybody agrees that this has just come as a body blow to the debt category of mutual funds. This, in fact, like Sonal was pointing out, is applicable beyond the debt category as well. So gold, international investing, all of this gets impacted as well. What experts are saying is that the indexation advantage was one of the key reasons why people actually looked at these categories, looked at debt, gold, international funds. So if you take that away, it definitely, comes as a big setback for this category. Further, not only is this proposing the removal of indexation benefit, but it will also be taxed at a marginal rate, right, which is the slab rate. So that is something important to keep in mind as well. Experts believe that in this context, money may now move from this category to sovereign gold bonds and back to perhaps fixed deposits or NCDs in the debt space. Also, another point to note is that in this category, retail investors are not currently that big, right, in the entire fixed income space. So it is really the institutional clients as well as HNIs who perhaps could be harder hit. But all in all, everyone we've spoken to has just said that this is a huge blow for the debt category of funds.
All right, Pavitra. Thank you, Sonal and Pavitra, for explaining this to us and telling us what the experts make of that as well. With that, we're out of time on this edition of Chartbusters, but not, out of time on the discussion of this topic. Trading Hour on the other side of this short break will carry this discussion forward with our panel, including AMFI Chairman A. Balasubramanian, DP Singh, Deputy MD and Chief Business Officer at SBIMF, and we also have Firoz Aziz, the Deputy CEO at Anand Rathi Wealth.